Hi, Sasha. Thank you so much for coming to the Founder Talk. How are you today?
Hi, Massimiliano. I'm good, thank you. How are you?
Oh, good. Thank you so much for coming from Berlin. I love it.
Great city.
Before talking about your venture, would you like to give an introduction to yourself?
Yes, of course. My name is Sascha. I'm from Berlin. Very entrepreneurial background. Had experience through several industries. Founded my first company in the music industry, and then went through various technical companies in health tech, travel management, leadership development. My last company was the Argonauts community, which I left end of 2020. And since then, I'm building GM data centers, which I'm happy to introduce in a second. Privately, I love everything that has to do with winter sports and surfing.
Thank you so much, Sasha. Let's go straight to business.
Perfect. We're GM Data Centers incorporated in Switzerland, and we have built, or we're building the Green Mining DAO as our first brand. We believe that Bitcoin is the future of money, and we make investing in Bitcoin mining easy. As many people know, or as you may have seen also over the last few years, Bitcoin is becoming more and more popular, especially with retail investors. We see a compounded annual growth rate of about 15% since 2017. And on the right side, you see a huge increase in retail wallets or basically supply held by retail. So retail investors want Bitcoin. Though the issue is Bitcoin mining is the only way to get access to Bitcoin at real or fair cost. So while other people buy Bitcoin today for 30,000 on exchanges, we produce it for below 10,000 in a Bitcoin mining facility. Though retail investors don't have access to that. They don't have access to the resources, be it energy, locations, or equipment. If they have access to these resources, they most likely overpay on energy prices, on equipment and everything else. And once they have equipment, they miss the knowledge to actually operate such a Bitcoin mining facility because it's quite complex. You need technical understanding, but you also need macroeconomic understanding. You need understanding of software, hardware, and many things come together. And last but not least, when people buy into Bitcoin mining, so they may own a machine or a few machines, or they buy shares in a private company, they are very limited in liquidating their potential profits by selling the machines, because how do they find a buyer? Or selling company shares in a private company, how do they find a buyer? So retail investors don't have access to profitable Bitcoin mining, and that's basically what we solve. So our product called Co-Mining is the first tokenized ESG-focused Bitcoin mining product for retail investors. And we mine Bitcoin 100% sustainable with renewable energies, 36% below global cost average. So we're green and cheap. We fractionalize ownership of the company. So basically our company lives on the Polygon blockchain. And this way users can purchase shares of the company from $10 on and can trade them on a secondary market. Third, we actually pay out the dividends to our investors. So we're operational since September last year with the first facility. We've paid out 2 payouts to our investors, and they're very happy, obviously. So we pay out the Bitcoin dividends quarterly. And then last but not least, as I mentioned before, we have a secondary market. So investors can not only buy and hold shares of the fractionalized Bitcoin mining facility, but they're actually able to liquidate their position or sell their position or increase their position on our secondary market. That's how it works. Number one, users allocate funds. They can do it by bank transfer or on-chain with Bitcoin or USDT. Second, they receive GMT, which is the green mining token, which represents a real share in the company. So it's a security token backed by real assets. 3, we allocate the capital into our data centers or purchase one. 4, we operate the Bitcoin mining facility and produce Bitcoin. And 5, every single quarter, we pay out the Bitcoin dividends. GM DAO's business model is to keep a 20% carried interest on every facility that we launch this way. This is our actual target persona. So we're not targeting the 20-year-old crypto degen that invests into little images or NFTs, but more people that have gone up the corporate ladder, that are interested in allocating capital regularly, be it 10 to 50K per year, into shares of companies, into real estate or ESG products, which one we are. On the right side, you see the growing ESG market over the next couple of years. And I think a 24 billion or trillion assets under management for ESG investments as a low assumption for 26 is a huge market and potential. Our business model is very simple. We do co-mining, and we keep 20% of every facility that we launch. We do self-mining, where we produce Bitcoin for ourselves. And for every token that is launched for each facility that can be traded on our platform, we take a transaction fee. And the beauty is we are actually capable of exiting the shares and the tokens of the company at any time that we want on our own platform. Our current profitability is about 20%, and we're increasing that to 40%. And we're aiming for 171% compounded annual growth rate over the next 5 years, targeting 18.5% profit after tax. And I think that's my 5 minutes, if I'm not mistaken.
Absolutely great. I mean, you've been even below 5 minutes, and I'm very pleased what you're doing. It's uncountable the number of funders I've been talking to and coming to pitch before EquityMatch and during EquityMatch about Bitcoins, about crypto, about blockchain, about and so on. But I have to say you're the first one who is allowing retailers coming to mining. I never heard before. So it's very unique, at least for now, for me, because it's time see that I can actually invest inside your platform in real mining, do not pay 30,000, 40,000, 20,000, 10,000, depending how the market goes. And at the same time, buying real token, even backed by real asset. This is I'm very pleased with what you're doing. Let me ask you, how exactly is my journey if you want to come and use coming to your platform and I want to start investing? For many like me, I mean, I'm not that savvy when it comes to crypto. Sometimes I do, but I can't say I'm a crypto savvy guy. So what I can do, I can approach your platform, and how can I make sure I'm doing right?
Well, it's quite easy. We actually guide you very well. You go to our website, greenminingdao.io, and we're doing 2 financing rounds right now. So you can either be part of the global network investors, which are part of every single facility that we're launching, or you can buy into one very specific facility. This is done because we know that people have different risk profiles. Some want to participate in a facility in only Europe. Others want to participate somewhere in Asia or in Paraguay. It depends always on the risk profile of the people. So you go to the website, you log in, we do the KYC for you. So basically you upload your personal data or the company data, because some people invest with their company. We do the KYC in the background, and then you get a confirmation. And then in our investor app, you basically read and sign the documents regarding your purchase. You click purchase, you transfer the funds, we transfer you the token, done deal. We take and that's basically what the retail or the participant and the user actually experiences.
We've been talking about different investing profile as persona. So what's the difference between one facility and the other one? And can you just explain in very few words what facility means?
Yes, of course. When I speak about facility, I mean a data center, which is could be 20 to 50 square meter size. Each of these data centers holds about 1 to 4 megawatt in capacity. And you find a so-called ASICs inside, which are a specific computer to mine the algorithm SHA-256, which is the algorithm that secures the Bitcoin network. And what I mean with facility is this building with the data center inside, with the machines inside. And that's what I mean with facility. And the difference between different facilities is the location, the energy price, the energy source, obviously, and sometimes even different machines inside. So if you, for example, look at Germany, where I live, current energy price is somewhere between 20 to 70 cents, depending on where you are, where you purchase it from, and it's not always 100% green. And you have to really think of or really search for getting the right access to the right energy, especially if it's sustainable and renewable. Now, if we would have set up a data center here, then you would have the parameters. It's not 100% green, or you need to at least do some research, get some certificates, cost you 20 cents per kilowatt hour. And it's in Germany a quite secure country, stable political situation. If you now, for example, looked at what I forgot, not a real, well, let me restart. So if I set up a facility in Germany, 20 cent per kilowatt hour, it's not 100% sure where exactly the energy comes from. You need to figure out the source of it. And third, you don't have a perfect environment, so to say, for Bitcoin mining or Bitcoin itself from a political landscape. If we, in comparison, take Paraguay as a country where our current facility is operating and we're planning to get to 100 megawatt over the next 5 years, you have 3.7 to 5.7 cents compared to 20 cents per kilowatt hour. Second, Paraguay is running 100% on renewable energy because they have two huge hydropower plants that power the whole country. And third, they have actually last year launched a law that defines Bitcoin mining and high performance computing as a very specific category for energy consumption. So besides retail, commerce, and industry, you now have a fourth energy category, which is for Bitcoin mining and high performance computing. So a very clear landscape. But either way, sometimes investors may want to buy into something only in their country, be it Germany or Greece or Sweden or Norway. And we can come up with all sorts of countries where we can get access to good, sustainable, and cheap energy, right? That's basically what we do. And yeah, does that answer your question?
Oh, absolutely, perfectly. Let me ask you, I'm talking as I like investing, right? This is my life. And on EquityMatch, we're actually raising our first fund in investing in startups, but I do also alternative investments. So in my case, if I want to have a more broadened portfolio where I can risk my political problems, energy cost, I give you the money, you are the one who's going to place in different facilities on my behalf.
We haven't done that yet, and we're not yet a fund, so to say, and we don't have that structure set up, but there is a option where you can buy into the holding called GM Data Centers AG.
You have already.
Yeah. This is up and running. Yes.
If I want to invest in one facility, okay. Yes. In terms of pricing, I suppose the price getting to Germany would be higher than the price getting to Paraguay, or it's vice versa.
No, it's exactly what you're describing. To be honest, we wouldn't set up a facility in Germany. It doesn't make sense. It's not profitable. So we need specific energy prices, and Germany is definitely not a place that currently plays a role.
That's Europe. I do believe crypto is very much for emerging markets before then emerge and developing market, because it is what it is. There's nothing. Effort in emerging markets is much higher because they need to boost the economy. Germany is still the biggest economy in Europe, or one of the biggest in the world. So whatever it is. Now, it's very nice to see your focus on ESG. Can you just stress a bit more? Are you using footprint, polluting energy, or just focus 100% on renewables?
We'll focus 100% on renewables. And we started the project, or the project was incorporated last year in February. And the facility went online in September last year, 2022. But the founding group has already done some research about 2 years before. We've set up 2 facilities, one actually in Europe and the other one in Middle East. And we were operating both only on sustainable or renewable energy, one on hydro, one on solar. And our thesis was we need to make it possible to operate these data centers fully on renewable energy. And we don't, like when we talk green, we don't mean nuclear, we don't mean flared gas or things like that. We're really about using renewable energy. And the reason was very simple. We as founders and founding team believe 100% in Bitcoin as a solution to the current problems that we have in our financial system, be it the inflation that we see or the control of governments over or central banks over currencies and currency increases, or be it transactions, one bank to another, Germany to Mexico, takes you either 2 weeks or money doesn't go through anyway. So there obviously Bitcoin as a currency, but also as a network, to cover transactions. In both cases, Bitcoin as a coin and as a network, we believe this is the future. The challenge though is it takes a lot of energy, and it's been in the media, covered everywhere, and we're all aware of that. So on a side note, our current banking system takes a lot of energy. The whole mobility industry takes a lot of energy. So if you go a little bit deeper into society, you will find that every single industry or every single thing that is valuable to us as human beings that helps us develop or make our life better and easier and healthier takes a lot of energy. So it's, in our opinion, worth spending that energy. It just needs to be renewable. And we can't sacrifice one system, one ecosystem, our environmental ecosystem, for another system, a new financial system. And that's why we want to build this infrastructure only on top of renewable energy.
No, I was saying exactly what you say right now. I mean, Bitcoin is being challenged for mining, consuming too much energy. But the point was, which kind of energy, right? Because if you can renew the energy any day, what is the problem? There's no problem at all. The problem just disappears. I mean, I'm a big fan of Bitcoin. What is, in my opinion, still missing is educating. A lot of people, they have no idea what we are talking about. They just read, they buy Bitcoins on Coinbase or whatever it is. There is nothing bad, but there's nothing true with Bitcoin.
You bring up a very valuable point, and that is the Bitcoin is such a complex concept that people need to understand, because they need to understand history of money, they need to understand macroeconomic systems and cycles, they need to understand the political influence on finances, they need to understand software and algorithms, they need to understand hardware and data centers. So it's a huge topic, and I totally understand that people don't have the time and sometimes don't even want to take the time, and then have the negative information on the media, like crypto coverage, and we highly differentiate ourselves from Bitcoin and crypto. It's two different things, right? And that's why we founded this as a DAO. That's why we say green mining DAO, because Bitcoin mining is one part, the decentralization and tokenization is another. But then what this makes it come together is a lot of people, a lot of knowledge all comes together, and we also take on the part of education. So we're the knowledge and R&D and everything that is being created by us as a company, as well as by the community members, is being polished and distributed to society, because one of our goals is also the education of our users, but also people that are not users yet.
Let me close with your point of view on next. So today you're doing great. You're already profitable. You're already giving back money to investors. What do you want more from life? Where would you like to be in 5 years' time? So where do you see yourself? Because you have created the secondary market. Where would you like to be? What's your vision for your company?
The vision for the company is to become the largest and most progressive ecosystem for decentralized Bitcoin mining. And we've just set up the first facility, right? We're still small, and that facility is profitable, yes. Though we're aiming to get to 1 gigawatt in total capacity of data centers over the next 10 years. And within the next 5 years, we want to get to 100 megawatt as a starting point, so to say. This will be built out in South America for the first step, but we're aiming to decentralize further and get the data center set up in Europe, in the United States, in Asia, in Middle East. We're looking at various locations. We've, by the way, analyzed 185 countries all over the world, so almost all of them, about their sustainable energy, crypto friendliness or Bitcoin friendliness, and macroeconomic health. So in 5 years from now, we are still 100% green, still mining below global average price. We are at 100 megawatt, and we're well known to be the most user-friendly and green, profitable Bitcoin mining ecosystem.
Just the last one, and after we had to close, unfortunately. Can you spend the last 30 seconds on your round? How much you're raising and for doing what? So
we last year raised our pre-seed round. We wanted to do 500, ended up with 1 million, so 100% oversubscribed. Now we're doing our seed round. We're raising 2.5 million, and we're allocating a large chunk of that into the build out of our data center, 2 million into data center. And then the rest of the 500 is split into 300 for our further development of our platform, 200 on marketing and community management, and people can participate from 25K on. It's a convertible loan, 5% interest, full conversion once the data center is set up. And I think that's all.
Thank you so much, Sascha. Thank you very much for coming to the Funded Talk, and I hope to see you soon in our pitch event and our next.
Good luck to you.
Thank you.
Thank you so much.